Hey everyone, welcome back to the channel. Today, we're diving into something exciting and a bit advanced: how to short on Kraken in 2025. If you're into crypto trading, shorting can be a game changer for profiting from market downturns. But remember, it's not without risks, so let's break it down step by step to keep things safe and straightforward. First off, what's shorting? Simply put, short selling means borrowing an asset, like Bitcoin, selling it at the current price, and then buying it back later at a lower price to return it. The difference is your profit. On Kraken, a leading crypto exchange, this process has been streamlined with new 2025 updates, including enhanced leverage options and better risk management tools. Before you start, make sure you have a verified Kraken account. You'll need to enable two-factor authentication for security. It's a must in the volatile crypto world. Once that's set, head to the trading dashboard. Look for the Margin Trading or Advanced Trading section, which Kraken has upgraded for 2025 with intuitive interfaces and AI-driven market insights. Step 1. Select the asset you want to short, say Ethereum. Choose Short from the order type options. Next, decide on your leverage. Kraken now offers up to 5x in 2025, but start low if you're a beginner. Enter your order details, like the amount and stop-loss levels, to protect against big losses. Hit Place Order and monitor your position closely. Now, a quick word on risks. Shorting can lead to unlimited losses if the price goes up, so always set stop-loss orders. Kraken's 2025 features include automated risk alerts, which are super helpful. Only use money you can afford to lose, and consider practicing on a demo account first. There you have it. Shorting on Kraken made simple. If you follow these steps, you'll be trading like a pro. Hit that like button if this helped, subscribe for more crypto tips, and drop your questions in the comments. Thanks for watching, and trade smart.